Hello and welcome. My name is Charlie Gibson and you're watching Business News brought to you by Blythe Way. And today we are very privileged to have a very unusual sort of company joining us. It's $500 million roughly, and it has production and profits and cash flow from 3 mines. Now, I won't need to tell you that at the moment the markets are taking a bit of a dusting, and this company is very notable as an exception. While the markets are down 1-2% in the last couple of days, on each day I might add, this particular company has seen its share price rise. As we speak at the moment, or that is to say when I last looked at a screen that was fairly near to me, it was up to at 335. So I'll give you a clue, it's Canadian dollars. Now, not only is it up today, but it's been fairly stable over the course of the last, year and a half, roughly. And if you bought it 2.5 years ago, roughly, you could have bought it at about $1 a share, and it's now trading, as I said, about 335. So as the Americans say, I'll let you do the math, but roughly speaking, you're looking at a return of a couple of 100% and a little bit more in 2 years. Well, I'm delighted to be able to introduce you to Mike McAllister now, who is joining us, who is Vice President of Corporate Development of this particular company, which I'm now going to tell you is Sierra Metals. Mike, thank you very much indeed for joining us.
Thanks for having me.
I hardly know where to start with Sierra. You've got 3 mines in 2 different countries, in Peru, in Mexico.
Correct.
Why don't you tell us a bit about them?
All right, so as you mentioned, we do have 3 mines in 2 countries, which offers some nice diversification. But we do have the Yaracocha mine in Peru, and that's a polymetallic mine in the sense that it produces zinc, copper, lead, silver, and gold. Then we also have 2 more mines in Mexico, the Bolivar mine, which is a copper mine, and then we have the Cusi mine, which is primarily a silver mine.
Are there any synergies between them, or is it just that you run each of them very well?
There's synergies in terms of purchasing or human resources, but in terms of the metals, Yaracocha is pretty much a standalone operation. Mexico shares some administration and some management, but they're very different operations.
Okay, so why don't we start with flagship,
All right.
which is Yaracocha in Peru, produces zinc
Yep.
and copper predominantly.
Yes.
And am I right in thinking all 3 of these mines you're looking at expanding at the moment?
That's correct. We've actually just completed 3 PEAs recently, looking at expansions for all 3 mines. And so at Yaracocha, we're looking to expand it from the current 3,000 ton per day throughput to 3,600 tons per day, probably happen around mid-year 2019. We're just going through some permitting right now, obtaining an EIA permit, and then we can apply for our expansion permit. It's a little bit more bureaucratic in terms of permitting in Peru. And then we're looking also at a further potential expansion of up to 5,500. We're doing a feasibility on that now, which would happen in 2021.
So does this mean more milling, more crushing capacity, or is it more focused on the plant? I suppose where's the bottleneck that you're hoping to open up, or you are opening up, in order to affect this expansion?
It's actually in the mine. The mill actually probably could produce almost 4,500 tons a day already in its current form. So we would need to add a little bit more crushing and some other work. But we need to expand the tailing ponds there. We need to expand the waste rock facility. But also we need to expand out and finish a shaft that will help us to access the newer area. We actually just completed a major infrastructure project. It's a tunnel that is at the 700 level. So it basically moves the surface down 700 meters, which reduces hoisting time, and the equipment we're going to be using in the tunnel, which will act as a conduit between the mine and the mill, will be able to operate with larger equipment and be able to move more muck and more ore. And so we're actually developing the mine, and we've been spending quite a bit on exploration to develop more ounces and more reserves to support increased throughput.
Tell me a little bit about the operating environment in Peru, because I've come across mining companies over the years, and they found it to be a challenging environment, shall we say. Yaracocha, we should say, has been in production since
the 40s, so
the 40s.
70 years.
So the country and the local community have had a long time to get used to this, so presumably you have them on board. So to the extent that it can be, presumably you're expecting that the permitting to be a relatively simple process.
It's a simple process. The way it works is, for example, on this environmental impact assessment, We had to basically present to the communities when there's not many communities around us. We're pretty high up. We're at 4,600 meters of altitude, and there's a few villages around us, alpaca farmers essentially, and so we don't have a lot of communities per se, but we have to present to the communities. They come back to us. So I think the first time we presented the whole plan to them, they came back, they had 300 questions. So we answered them. The second time around, they had 190 questions, and then the third time we've just presented, and now we're waiting for the final turnaround. But the government has then brought in a few other ministries so they can ask questions as well. So it's a bit, like I said, it's a bit bureaucratic in that sense, but it's not impossible. It's time consuming. You have to work through the process.
4,600 meters, that's properly high.
It is.
That's breathless high. Do all the machines work okay at that altitude?
Everything works fine at that altitude. We have.
Is it because they've been tweaked to work at that altitude?
Well, the one thing we do see is like we have some battery-operated equipment in the underground that helps reduce the pollution, but it doesn't operate to the same efficiency it would at a lower altitude. So we do have to take into account that equipment and machinery doesn't operate at its peak capacity at that altitude.
So Yaricocha, summary, looking at a 20% expansion of throughput. What sort of time frame?
So the 20% should kick in midterm next year, so around the end of the second quarter.
Okay, so about 9 months' time, that's when we're looking. You report quarterly, presumably?
Correct.
So we'll be able to see that as soon as it happens?
Yes.
Okay, and CapEx associated with it?
So there's not a lot of CapEx associated with it per se. Most of the projects have been being staged over the last few years. So we've been spending $30 to $50 million in CapEx, I would say, for the last few years, and we're going to continue with that amount, probably around the $50 million of CapEx a year until 2021. And that's paying for the expansions like the underground tunnel, the mills, expansions, any work, any capital projects that have to be done. So we're spending that across all three projects. So I would say the biggest share of that is at Peru, and then for other growth would be followed by Cusi and then Bolivar. Bolivar doesn't require a lot of CapEx to expand.
And then expansion opportunities on strike and down. I mean, presumably this deposit goes on forever, does it?
It does. And so the central mine has been mined for 70 years. We've actually started looking to the north and following the contact to the north, and we've had several new discoveries. So we discovered the Esperanza Zone, Escondida, Contact Oriental, Corpus Chico. So we continue to find more ore bodies as we go to the north, which are not necessarily at depth. However, the mine is open at depth as well. And so we're essentially extending to the north or laterally as well as at depth.
And do you find that the resources, when you discover them, do they convert easily into reserves?
We do. We have probably, I'd say, about 80% conversion from resources to reserves.
Okay. Now, that's a lot about Yaricocha. Bolivar?
So Bolivar is our copper play, and this one's a very much a tonnage operation. Currently we're mining about 1% copper, and so we find our costs drop the more that we're pushing through the mill, and so we experience economies of scale. And so the goal here is to take the production from a current 3,000 tons per day to 3,600 tons per day. We're adding some flash flotation cells, another crusher, some other equipment into the mix right now, not very expensive, and that's going to bring us to 3,600 tons per day in January. And then we're looking at extending that further to 5,000 tons per day in 2020.
So that's a very big expansion then at that point. And what sort of CapEx are we looking at for that?
I would say it's like 20 million and under. We don't need, again, the mill can handle a lot of the capacity already. We are looking at some potential projects, like a potential, it's about a 5-kilometer stretch from the mine to the mill. And so we actually, and it's a very rugged topography, so we're actually examining an underground conveyor system that could bring a lot of the ore right to the mill versus having to truck it.
Bolivar is epithermal vein, is that right?
Yes.
But Yaricocha isn't, is it? It's carbonate replacement.
Yes.
Yes. So quite different then, sort of genesis of these two deposits.
It is, and it's very easy. Like we have a shaft system at Yaricocha, but at Bolivar, it's just ramp mining, and we're only like 250 meters below surface. So we just ramp down, and we've actually just expanded all of our tunnels to 5.5 meters by 5.5 meters, so we can use surface equipment right down in the mine now.
And again, blue sky, exploration potential?
Oh, there's a lot. We've actually had several new discoveries there. We completed a Titan 24 geophysical survey, which can actually penetrate quite deep down to 1,300 meters. We had completed one at Yaricocha. We've also done one at Bolivar. At Bolivar, we had 20 targets. We've narrowed it down to 8 high-value ones. We've drilled on 6 of them with good success, and we've had new discoveries, including Bolivar West, Boulevard Norwest, and now the Senegita zone, which have actually higher grade. Boulevard West, for example, is 2.5% copper equivalent versus the 1% that we're currently mining. So we are looking forward to higher grade material starting in late 2019.
Does that present any challenges when you have two such different deposits?
Not well.
From a management perspective.
Not really. Like I said, Yaracucha is almost a standalone operation. The geologists that work there, the management team, are at that site. So, and we sell the con that we sell, it gets shipped to the Port of Lima, and then it goes to the off-takers for these concentrates. And so it doesn't really cause a lot of problem for us. And, we produce concentrates from both mines. And so it's just understanding the metallurgy most of all. And we've done actually a good job in improving our metallurgy. We brought our recoveries up at Boulevard now from the low 70s up to the mid 80s. And at even our other mine, Cusi, we brought it from 65% up to 87%. So
is that the key sensitivity? Is it the metallurgy?
It is the metallurgy. Like, for example, at Cusi, we used to put everything through a polymetallic type circuit, and now we actually separate the ores. And so we do campaigns of the different type of metals, and we actually find we get better recoveries.
Are you, out of curiosity, a metallurgist by training?
No.
Geologist? Do you have a technical background?
I don't have a technical background.
So you're the businessman who has to keep the whole thing together. Have to keep the show on the road.
I need a little bit of every basket, but I am not an expert by any means as a miner, a geologist, or a metallurgist.
And then you take people out of whichever basket they're from and throw them at whatever problem happens to be
pretty much
presenting itself to you at that time. Okay, so we've done Yaracucha, we've done Bolivar. QC is the one that remains to be spoken about. So tell us about QC.
So QC is a development project that we've now brought into production. We started the year, we were producing at about 200 tons per day. We've been ramping that up to 400, and we finished the second quarter at 650 tons per day. We now are producing at 650 tons per day all through the third quarter and into the fourth quarter, and that's the nameplate of the existing mill. So we're actually putting in a second mill right now that's 600 tons per day, and that's going to bring us to a 1,200 ton per day capacity, probably mid Q1 next year.
So you've got all of these expansions going on, you've got these three mines which are already in production, they're already generating profits, already cash flow, all of those good things. You're about to expand them, so hopefully you're getting more profits and more cash flow is the way it should be working. So what do you do? I think I'm right, so you're not a dividend payer at the moment?
We're not a dividend payer at the moment. We have paid dividends in the past, about $10 million worth. But right now, we did trim back the dividend when the metal prices really took a tank back in 2015. But we're on such a big capital expenditure right now, growing these mines. We are using the cash for the expansions. However, in 2020, once we reach these expansions in 2021, we definitely will have quite a bit of cash flow. So obviously, we would be looking to give some of that back to shareholders, I think.
And what is the strategic plan? If I was to ask you to look out 5 years, you've got these three mines. In 5 years' time, you're going to have the same three mines and they're going to be bigger and more profitable, or are you going to have 4 or 5 mines? And where will those mines be?
Exactly. So I think in terms of the existing mines, you're probably looking at a double of production from where we are now in the next 5 years. There's still a lot of opportunities in these areas in terms of feeding the existing mill, so there might be further expansions on the horizon. But also at the same time, I think by that point, we're going to be able to start looking around and seeing who might be a nice addition to the company and who can we bring in. So I think, in the next few years, we have quite a bit of organic growth in our own mines. However, I would say by 2021, you're going to start to see us
looking into the corporate. Yeah. All right. Well, we shall look forward very much to see that. Just finally, there's been quite a lot of volatility, I think it'd be fair to say, in metals prices over the last, 3-4 months, particularly in the zinc price. Just tell us a little bit about how you go about managing that volatility.
Sure. Well, in terms of zinc, we're a lower cost producer to start with. Our all-in sustaining cost at Yaracucha, where primarily most of the zinc comes from, is about 77 cents. And so we think that, we can probably get that down a little bit more as we expand our production, but we're a low-cost producer to start with. And we also produce a premium product there, which is in demand from the off-takers. So we get very good treatment and refining charges, which helps to keep our costs down. However, we are always looking at, automation and other ways that we can help to keep our costs down and lower those costs. And we continue to look for higher grade deposits that help offset some of the costs just through grade.
All right, excellent. Mike, thank you very much indeed. It's been a pleasure to have you with us. Come back and tell us in a few months' time how it's all going. But Thank you very much indeed.
Thank you.
Ladies and gentlemen, that was Mike McAllister, the Vice President of Corporate Development at Sierra Metals. Sierra Metals, as I say, the shares are up from about $1 a share. When I talk dollars a share, I'm talking Canadian dollars a share to about $3.35 at the moment. That's over the space of about 2.5 years. According to my consensus estimates, it should make about $100 million, and I'm talking US dollars now, in EBITDA in the current year, and probably for FY19 as well. But FY20, the market, and presumably that's because of all these expansions, is expecting 150 million US dollars a year. So that's what the market is looking at. As it go away, have a look at the shares. I will be back looking for more such opportunities with you in a week's time. And until then, you have a very capital day.